All right, good morning, everybody, and happy Tuesday. I hope everyone is doing well. Before we get started, I just want to quickly make sure you guys can all hear me okay. So just a quick yes in the chat box would be wonderful, just to quickly confirm all of that. And then we're going to do a quick one today. I'm going to try to keep it to maximum 10 minutes. As I have to jump on a quick institutional call in a few minutes. But if you guys could just quickly let me know if you hear me okay. Thank you. Okay. All right, folks. I'm going to get started here right away. Again, we're going to keep it to maximum 10 minutes. If you're here for the first time, please make sure you subscribe to the YouTube channel. That way you get updated in real time when we go live. I also would encourage everyone to give us a thumbs up like. That allows us to be able to continue to grow the channel. Today, I want to just quickly remind everybody that we do have Thanksgiving week this week. And so that tends to mean that markets are a bit quieter. Yesterday's move in the equity market, which I want to talk about in a minute, was I think something we have to respect from the potential that it could be the beginning of a year-end rally, but also the potential that it was just an oversold rally. Which one it is, I wish I could tell you. We can kind of get a guideline by using momentum and trend, and that's what I'd like to quickly do here right now to go through. Let me see where to start. I think the most important thing, just from an index perspective here for the S&P 500, is we still think that momentum, by the way, has turned bearish, right? So if you look at the SPY, so the S&P 500 has turned, oh, that's the wrong chart. I think it's, hold on, let me find the right chart. My apologies here. So the S&P and the NASDAQ are in bearish momentum for the first time since February. But again, it does not mean that momentum can't change back up. I think the likelihood is there that we see, again, another retest of those lows and lower. But, you know, we still are in very much a year-end, people want to believe, kind of rally mode. And until that fades, you know, it's possible that these markets want to bounce more. The thing that we're watching very, very closely is how do markets react to Thursday's sell-off. So basically on the SPY, somewhere around 675 or whatever ish is a level we want to watch very closely. I said yesterday on this call in the morning, the quicker we overcome that level, the more the possibility of us having another leg higher, although we might be in a choppy zone. You know, another thing to keep in mind is we could be in a chop zone where the S&P does this for the rest of the year, right? Or something like this, right? Give or take a few points. So quite frankly, I think we're in a tricky spot. So we want to respect momentum, which for the time being, at least for, well, I guess as of yesterday still, and it's going to probably take another day or two of rally until momentum were to switch back up. But I still want to respect last Thursday's candle. I don't think it was insignificant. I will say the advent of computer algorithmic trading has dramatically changed the nature of some of those sell-off days, right? So if you look at the sell-off day on the 10th of October, or even the ones on July 31st and August 1st, and then again on Thursday, algorithms don't care too much about that because that's more traditional technical analysis. So the more the passive investing bubble continues, the more the odds that these kind of down days don't matter. So I would keep very open-minded, but I also want to reiterate that we do think that the potential for a year-end rally is not off the table at all. It is still the consensus call, but that's also why I think it's if it doesn't happen, it could go the exact opposite direction, right? So a lot of questions here, to be honest with you, to be answered. I don't really have a whole lot of answers this morning. I thought yesterday's rally was a bit stronger than I would have liked it from an oversold bounce perspective. But again, you know, we live in this day and age where algos rule the day. We have a very passive investor bubble, and that's kind of where we're at. So that's one thing I want to quickly point out. The other thing you can do is you can zoom out. And we mentioned yesterday the chart of Microsoft. So this here is the the weekly chart of Microsoft and Oracle. So Microsoft on the right, Oracle on the left. And what you can see here is essentially the weekly chart. You can see it's kind of a blip, the bounces we saw over the past couple days. So by zooming the chart out, you can see that this is not like it's some sort of major new rally, at least not on the weekly chart of those two stocks. And so I think that to me is another way of kind of helping to give you some perspective as to kind of what might be going on here going forward. Having said all that, and again, I'm unfortunately going to keep this very short today. So if you guys have any stocks and tickers you want to look at, please type them in like right now so we can address them. One stock that I do want to point out that to me continues to look very interesting is Apple. And again, the question is whether yesterday's rally was just getting us back to the previous all-time highs, and it's going to just chop here, or it's going to break out, or it's going to go lower. I truly don't know. I want to be very honest with you, but I do want to point out to you that Apple, unlike the S&P, you can see still has bullish momentum. That's that buy signal that came on the 7th of August. It remains intact. It remains in place. So, that is one of those stocks that's exhibiting essentially relative strength relative to the broader market. So, for example, if you were to do let's say Apple versus SPY, you can do something called a ratio chart. You can see that Apple has been relatively much stronger than the S&P. In fact, it's up 10% versus the S&P in relative terms since over the past month plus, so 5 weeks or so. So if you're looking for something from a trading perspective and that still has bullish momentum, which again, our trend or momentum indicator gave us that buy signal in August, this is a stock that might be worth trying. In general, what we're seeing is sector and group rotation. And that's really, I think, the main thing that's going on here. And so even though the MAX 7 stocks, you can measure them with the MAGS ETF or some other ways, you can see they too are in bearish momentum. It is possible that the year-end chase is masking the symptoms of the underlying weakness, and that this might hold up into early next year, into January. But again, I think we're at a very precarious moment here where we need to respect. So if we get new bullish momentum by our momentum work, I would want to absolutely respect that and be long. But right now, we have bearish momentum, and it might change any day. That's possible. But I don't want to fight that until we get a confirmation against that. So we are doing a webinar today in our educational series on sector and group rotation. So it's taking place today at 11 o'clock. So that's in about Eastern. So that's about in 2 hours from now. And I'm going to just quickly give you that link. Actually, Christian put it into the chat box. So if you guys want to join us, it's just a completely free session where we are going and teaching you essentially how to rotate through the market with a sector and group rotation strategy. So that's taking place today at 11 o'clock Eastern, so that's 8 o'clock Pacific time. And I certainly would welcome to have everyone join us there today. So if there's no tickers and no questions, we're going to keep it real short today. Again, I don't want to not answer any questions. If you guys have questions, I'm happy to stick around another minute. Otherwise, again, I hope I was able to give you some sort of clarity how we think about this through the lens of where we are right now. So that's pretty much all I have for today. I do think today is not an unimportant day because I think we have what's called Turnaround Tuesday, which means that on Tuesdays, sometimes stocks do the opposite of what it did on Monday. And yesterday, Monday, stocks went up. So maybe today they would go down. So that's the potential there. And anyway, we'll leave it at this. Hopefully we'll see as many of you as possible in about 2 hours in our sector and group rotation strategy. Copper, really quickly, just on copper. Copper's actually acting quite well once again this morning. So, copper is basically in what we call a chop zone. So this is copper futures. You can look at CPER. You can see we're in a classic from a momentum perspective. We are in a chop zone. We are extremely bullish copper through a multi-year lens. In fact, it's one of my most bullish cases. But in the short term, copper is in the chop zone. It's this morning, actually, copper futures are up about 2%. So we'll have to see how they trade through today. So here's copper futures. Let me see. Oh, this was copper futures. Sorry. So they would have to break out and us to get a new momentum buy signal. But from a momentum perspective, there's really no momentum yet in copper. So anyway, hope that helps, folks. If you are an Inner Circle member, we're going to do a really quick session in about 10 minutes. So hopefully we'll see you guys there. Take care, and we'll see you back here tomorrow morning for the last set to market for this Thanksgiving week.